Yo, what's up you guys? Welcome back to a new weekly market update, and in today's video we're going to speak about the negative retail sales that's going to drive the price of the dollar index even further to the ground. And we're also going to take a look at the NASDAQ, Dow Jones, as well as gold, and we're also going to answer some of those questions that I received yesterday on YouTube. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you do enjoy the content, please do consider smashing that thumbs up button, and let's try and get the video to 100 likes. And if you have any questions, just drop them down in the comment section below. But before we get started, what better way it is to start off with President Ramaphosa, who came out and said today, he said that they cannot invite the President Putin over and arrest him, as this will have severe repercussions on South Africa. He did say that there is a risk that Russia could potentially take us to war if we have to arrest him. So he said that if Putin decides to come over, none of that's going to take place. So don't worry, no war is going to take place for us as of now. Firstly, core retail sales and retail sales basically came through negative. Now, anything that comes through negative is bad for the dollar index, right? Most of the sales, I almost said most of the sales, but then I remember, I don't sell stuff for a living. But whenever something comes through negative, it's always bad for the dollar, right? But remember, it doesn't mean it's bad for the economy. It just means it's bad for the currency. What does that look like? Well, if you look at inflation, a lower inflation is bad for the dollar, but it's good for the economy. So that is just a simple example. But not everyone's gonna enjoy, it's gonna get the going to enjoy a negative into a positive there as well. And then we also have in South Africa coming up. I actually forgot about that to come through as well. Before we move on, there could potentially be another interest rate hike coming through for South Africans also, and that a further 0.25 basis point hike could come through to curb inflation. Now, you see basically how this South African economy is playing out the same way as the US. They kept hiking interest rates to curb inflation, and then as inflation came lower, the dollar then weakened because the Fed is not hiking interest rates anymore. However, this is not a good sign for the consumers, right? So keep your news, your ears open, South Africans. This is coming through on Thursday. So yeah, according to this article, we can expect another quarter basis point hike that's going to take us up to 8.25%, which is basically where the US was before they made a U-turn there as well. Now, let's continue with the conversation that we have here. We obviously have some housing starts, and we've got unemployment claims coming through tomorrow and Wednesday, and then that's the end of the line. But for now, I do not expect the index to continue this correction that it was supposed to be, unless something is going to come through that's going to basically just help drive the price of the dollar higher, and that is probably something that we could look forward to coming through next week as we have the interest rate decision pulling through, that I also expect the Feds not to do as well. Now, you can obviously see a base of the last breakdown that I did. We've been stuck in this 4-hour consolidation, and we have not been moving. Any case, article from CNBC is telling us that stock futures are little unchanged on busy earning days. So they're basically telling us that there's some companies that's coming through with their earnings. It says here the Bank of America reported better than expected earnings for the second quarter thanks to a higher interest rate. Now, if you know, the only people who benefits from higher interest rates is the people who implements these higher rates decisions as well. It's not people like me and you. We don't benefit from these things. That's only the Reserve Bank and the people who sit in the government and SARS, all the people that you pay tax to. They are the only people that basically benefits from this, because why you don't benefit. You get the better end of the stick there as well. But you can see how this works out as well. Bank of America reports at higher numbers because of higher interest rate. Morgan Stanley beat on both revenue adjusted earnings per share as well. And we basically have some reports coming through for the stock market. And we obviously know that gold is negatively correlated with the index. And if the index is going to print these negative retail sales numbers, I do not foresee, if we do break below this, then we definitely are going to go lower. But as it stands now, you can see here it says gold climbs as dollar dips, retail sales data in focus. Now the retail sales came out negative, and that's obviously going to drive the price of the index even higher. Now that we've covered the news, we are going to go straight to some of the questions that we got over here. First one is from Hidi Hussein, saying, as always, Rolando, you are on top of things, sir. Your content is always on point. Can you do a breakdown on gold, DXY, Euro, USD? Yeah, so if I'm going to cover that now. I'll add Euro USD with the information that you accumulated in this video. Will you forward the information to the relevant parties to get rid of these scammers? Well, yeah, I tried to contact these firms that I was speaking about, but they clearly have no interest in knowing what's going on. And so I tried to make contact with these people, but it's like, we're not going to answer. Johnny Law is saying knowledge is power, 100%, but applied knowledge is where the power is. Rhoda is fixing the country. Keep going, bro. Rolio, what about copy trading? If it's possible, let me know. Oh, if you're asking if I offer copy trading, no, I do not. Just saying. Keegan, Mr. Naidu saying hacker Jack. No, I am not. I actually got a diploma in IT, but no. Hey, sir, thank you for giving us knowledge. How can you please check AUD JPY for me? No problem. Okay, so now that we got that out of the way, I'm going to be adding Euro USD and AUD JPY to the watch list. Now, there's really not much to speak about this breakdown. Basically, everything else still stands as it is, but you guys obviously know that the next point of reference for the index is obviously the previous structure that got taken out, and I'm basically going to be lying on the market to give us to give us an indication. But you know that the market prints structure when there's a red candle printed next to a green candle. So what we have here now is we got the resistance and we got support. Now you guys obviously know that by now. The best way to trade this is obviously to wait for a clear break of structure. This will serve as a confirmation, a bullish confirmation that we can continue this move to the upside for the market to go and complete this impulse correction, and for the market to come back and hit this previous level of support that is now turned resistance. Exactly. Now we got support here as well. Negative retail sales is giving us an indication that we can expect also the index to dip below this level and continue lower. Now look, only time can tell what's gonna happen here, especially with the interest rate decision that's gonna pull through next week. We've got gold here as well. Gold, you can see how gold has obviously reacted off the negative retail sales. What we have here now is we obviously got gold also testing from a weekly perspective, a very strong structure that we have here. Gold has the potential of pulling back, printing a inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. And because the long-term outlook for gold is bullish as we stand now, we can definitely expect the price of gold to increase in value over time. However, what we are faced with here is we got a market that is currently sitting or coming towards this level of resistance. This would be my general point of reference for the short term. What we have here is if we do get a daily close above this level today, if this daily candle does close above this previous level of resistance, then going into tomorrow, I do expect a weak rejection and that continuation to the upside. There's no reason for why it could not take place, because there's no reason for any person to believe in the dollar as well. The NASDAQ is still at that level that I still anticipated. This move for me is still important, very viable for the market to come in, correct itself first. We haven't had any structure created here yet. However, we do actually have structure. My bad. We do have the market had now printed support, and this will be acting as a level of resistance. Now, there's obviously the best places to sell is obviously high, so that would be one of the places to sell. Alternatively, if you do want to get into a safer zone, you'd obviously want to wait for a clear break below support, and that support would be turned resistance, and then on the retest, definitely continue that move to the upside, to the downside. Next up, we have the Dow Jones here as well. Now, the Dow Jones is obviously now breaking above structure. This is going to be a very interesting point of reference for me, because why? One thing that market expectation is giving us is we are, like I said before, that the most obvious thing for the market to do is obviously return from here, but it's very important that we are reactive and not predictive. Potentially a slightly deeper pullback and then a continuation to the upside for the market to go and hit that level. Next up, we're going to take a look at Euro USD as requested. Euro USD obviously got some room to pull back itself to this level. Got a massive impulse. After an impulse, you expect a correction, taking the Fibonacci from the low to the high. We do have a 0.382 that's lining up perfectly with that level over there. So I do anticipate a move to the downside first, and before we do see any new developments to the upside. AUD/JPY probably berries. But let's see what we got over here. Yeah, I thought so. So what we have here is, you can see here the price action played out very beautiful. We had an impulse correction. We had a market that broken below support, tested it as resistance, clear impulse. After an impulse, you expected a correction. We had a 50% pullback, and we can see how the market is starting this move to the downside here as well. Looking slightly left, this is definitely a level that I would expect the market to pull back to. However, I would say it's a little bit late to get into this trade. However, if you are looking to get into while monitoring the price on lower time frames, you're more than happy to do that. Get into that move to the downside, and then potentially the market will come back and hit 90 to 990 is what I wanted to say there we go. So that's more or less where I would monitor, as this would serve as a confirmation where our resistance got broken and we now turn support. Guys, that is it for the market update. Thank you for your time. Please keep smashing that like button, my friends. You know, keep smashing that like button so that we can also help the video reach more people out there. Also, thank you for your time, and as always, cheers for years.